Hello, this is George with the Harmony Trading System coming to you from Frisco, Texas, and we are going to do the analysis for Wednesday, the 15th. And we are going to start off with talking about gold. So let's get it going here. In gold, we saw that major move and a major bearish engulfing candle that happened on the 13th. And that one, I mean, truly on just reversed everything and it got the price to be in the channel, the prior channel. We had a fake breakout that ran into resistance at target, close to target number one at 1887.1. It didn't quite get there, but that was the target that we had out there. And boom, the price action kind of shifted back down to that target number two, which is 1826. And then from there, we are forecasting that if this type of behavior continues, we could see target number three, which is 1765.3. We are going to run into this support area that we're seeing right here, and a couple of levels that need to hold 1800, 1803, and you're going to get into the 1791. And after that, you have nothing but that 1765 to hold you, and that will be an extended price action. And if we get to target number three, there is a chance that we experience a bit of a rebound off those levels. But that is just a significant behavior that we're seeing in gold as the price gets back into channel number two. So, what are our action plan? Any rallies back up are shortable. Any rallies back up to the top end of the channel into the 1843.4, those are shortable. I'd rather be short than long in any of this stuff right here that I'm seeing. If we get back to target number two on a rally, a dead cat bounce rally, 1826.2, I will take that as an opportunity to load on gold for a short opportunity. Let's take a look at NASDAQ, and we traded NASDAQ fairly well today. Basically, what we have here today is a doji. If you're familiar with a doji, it's just basically the market open and close at pretty much at the same price, and that is a price action that is signifies indecision. Okay, so in that indecision, the market really made a couple of moves that are worth mentioning, and we'll talk about them once we go into the 20 NT Rinko. But let's take a quick look here. They put a captain set up long, ran it up, uh, pulled it back into the end of the day, and then rallied back up, rallied that back up into the close. And now we're getting a bit of a continuation pattern off of it. Potentially, we could break 11,500 tomorrow, and or Globex. We are so extended past target number five, and the market is due for a counter trend. Okay, so let's go back to that. So this counter trend that could take us to 11,532.5. I I mean, definitely could experience a little bit of pressure on it, but we're going to continue to look at the 200 NT Rinko and the 100 and measure our risk according to what the market is doing. But ultimately, this overall direction is short. Rallies are going to experience a lot of short pressure, but we are extended to the point that we can experience at least a push to the 500 and potentially the 600 on a swing trade basis. Uh, if I see anything that is long, if the system gets in sync and is long, I will take those trades on the long side. But I'm not gonna do anything that is. I'm not gonna size up on the long side due to the fact that the market is just inherently in channel number two and short. Some of the prices that we need to look for in the morning is 11,327. We break that, then there's a chance that we'll break 11,243 and continue from target number two to target number three, which is 10,263.5. I have a feeling that the market is gonna give us a relief rally, either today or tomorrow. We do have a lot of economic news that's coming up, and the Fed fund rate is going to be definitely a big one for tomorrow. So let's move on from that to crude oil. Oh boy, yeah, here we go. So crude oil, we got a complete reversal here. We hit target number two multiple times, one, two, three, close to it, four and five times. We hit target number two, and we retrace. We are looking for any opportunity in this transitional zone, which is between 117 half into the 115 half, those 2 points, as an opportunity to buy for a continuation trade to the upside. So, and our risks need to be tight. Anything under 5 point, basically 115, we need to start just basically back off a little bit and let the market consolidate and give us a direction. We definitely need to see how they test 12.7 if this price action continue to go to push lower. But ultimately, this is an upward trend. It is a channel number one. And every time we came to this transitional zone, the price action showed some strength. However, this is a bear engulfing candle, and we may see a bit of a downside pressure before the market stabilize for a continuation trade to the upside. So some of the levels I need to be looking at is 120.8. Tomorrow the market needs to test that and hold above it. If not, then we could see a break below that 116 into the 15.5, and we need to see how that price action handles before we start making decisions in crude oil. Okay. Plus, you have inventory report tomorrow at 9:30 Central Time. So all the eyes are going to be on the inventory report, and we're going to see how that news will affect price action. Let's take a look at ES. I mean, when you're looking at ES, you're looking at NQ, you're looking at a lot of these things are going to be very similar in the way they behave. And your Globex is 37.37, and we're bouncing back off a down day in ES. Actually, NQ was stronger than ES in how it behaved. NQ produced a doji, while this one did not. That tells me that there's a little bit more strength in NQ than what you're seeing right here. Ultimately, this price action is gonna there's a likely scenario as we go into the Fed number that we see a bit of a relief rally coming into ES. One of the top areas that we need to test is 3,800. We break above that, then you're going to get a rally into the 3,871. Then you have that gap that is an issue for us, anything above 3,900. But ultimately, any rallies will experience a lot of overhead resistance because we're experiencing a major move lower, and there's a lot of people who would uh, there's a lot of money that's just waiting to short this market. So rallies can invite them back into that rotation for a continuation. Now, ultimately, for them to succeed, they have to push it past target number two, and you cannot break anywhere above yeah, basically 4,000, because that will start to shift this the environment that we are in. Okay, so let's take a look at. Did we talk about YM? We talked about gold. YM. Yeah, here we go. Same thing. If we get into target number two tomorrow, that would be an area where we could start looking at some resistance. If we break anything above 31,000, you're going to get a market that's consolidating. Then you got that gap uh, between 31,372 and into 31,237. So that gap is important for any long to fill. and the shorts are going to defend it. So we're going to get a two-sided market tomorrow and into the rest of the week. And in this two-sided market, the most critical aspect is to stay away from trading around Globex. Market tends to be very choppy, and we traded around Globex very well today, and avoided being chopped up in it. Okay, so that's that. Now let's take a look at some of the news items that is critical to our trading tomorrow. Today we came with the PPI and core PPI. Tomorrow we're going to get into core retail sales and Empire State Manufacturing, import prices. You got crude oil inventory report. Then the big one, and the big one is FOMC statement, Fed fund rate. You got the press conference afterward at 1:30. This time zone is gonna be it's gonna be an issue, man. We're gonna see a lot of action tomorrow off of that. Not in anticipation of it. I feel like we will see a bit of a relief rally, and depending on the statement, it could be baked in the fact that they're going to do a three basis points. Okay, and if the news came up just as expected, I think the market will rally on it. If it's worse than three basis points, then maybe that's the surprise that will push the market lower. But I feel like they factored in the worst case scenario here. So and once the relief rally happened, you really got to look at the internals of the market before we start making decisions. The market could be decisively long tomorrow. So ultimately, I would not be in any position prior to that announcement. I will wait for the announcement to be released. Then the first 2 to 3 moves the market makes is a false move. Then the market will take a direction, and we will be ready for that type of price action at that point. Uh, Thursday, we got Philly Fed unemployment claim, two big ones. And then on Friday, you got the Chairman Powell speaks, and that will be that for that one. Now, a little bit of trading that we did today. Uh, all right, so this is how we ended up today. In the live room, we ended up being up 928.46. Then I saw this beauty of a trade, and I'll show you what made me get involved. And then we had a couple of other trades after that. So we ended up the day at 54.45 on 12 decisions. Let's take a look. That's that one right here. Okay. So we're going to put the global cross and tell you what that looked like. And here we go. All right. So basically, what we saw here is the market it produced a captain setup. A captain setup is a formation right there, and we talked about that right here. Okay, so that formation is a captain setup long, and whenever we see it, it's a significant event, and typically the market moves in that direction um, based on the fact that there's a consolidation breakout pattern. So we saw that, and we came in here as like, all right, we got 2, 2, and 2, so we got into 6. Got out of 2 and 2 in that run up, and then we went break even. Actually, we didn't go break even. We let the market come back down. We already built up about $800-900 worth of profit. Sold one here and left one for target number 5, and ultimately the market ran up based on that cap and setup and hit me for target number 1. I mean target number 5. So that's that trade right here, and that ended up being 27.81 on that decision, and we ended up the day fairly nice, about 5 grand. So that's that for me. And just be careful tomorrow. Make sure that you are not heavy or in a position, at least from my perspective, for risk control. Be in a position prior to the Fed's coming out with their numbers, and typically the announcement at 1:30 is also a market mover. So I'm going to be patient into those numbers. Actually, once the numbers are out there, I'm going to just let the market do its thing, give it about half an hour, let it simmer down a little bit, then start looking for directions. I will see we'll see us tomorrow taking couple. The market is going to be a two-sided market. You're going to see the longs being forceful, and you're going to see the shorts being forceful. So stay safe and remember, precision is a decision in trading, and always trade in harmony. And we will see you on the next one. Have a good one.